Let me go back to this for a second. We have this high on this candle. Then we have the candle right after that here, the highest one. And then the lower high of this candle here. So that's a swing high. Very simple little pattern, but it means a lot when it's in the proper context. When this high is broken with this particular candle right there, that is significant only on the basis that we have taken liquidity out of the marketplace. That's it. So when it broke this short-term high, this is more meaningful. And then the market will start to seek buy stops, okay, or buy side liquidity. That would rest above here, here, and here. Now I shared an example of live executions, and I was teaching on the idea of utilizing micros, which are essentially $2 per handle, okay? So, or 50 cents per tick. This chart is NASDAQ E-mini. This would represent $20 per handle. And there's 4 ticks in each handle. There's your $20 per handle. Okay, so again, what that means is 14,680 to 14,681. That's one handle or 4 ticks. There are some that will doubt the idea that you can trade all these little internal swings. Okay, and I'm going to give you some insights on how I was doing it. Okay, the main context of this lesson is for you to go in to your charts and try to prove me wrong. Okay, that's the challenge here. That's your homework. I want you to learn what I'm doing in this lesson here, and then you go into your charts back testing, and I'll show you what that looks like. What does it mean to be back testing, and what you're looking for, and how you're going to screen capture all those things. But your mission is to go into the charts and look for this not being true. Okay, this is exactly what I did on baby pips back in 2010. I told everybody, do not take my word for it. Don't take my word for it. Go into the charts and see if this is true or not. I believe it, but I don't want to try to convince you, because I won't. You'll convince yourself once you start seeing it. It's over. There's no argument after that. Okay, but it's simple logic. Very simple. This is a very clean chart, is it not? All I'm going to do is add a few annotations, and this is about as extensive of lipstick we put on our chart. I know it's shocking, right? Can you still see the candles? Because it might be a little obstructive. I'm being facetious. You see these guys out there with these charts that have graffiti all over it. You can't even see the price candle. Nothing. You can't even see any of it. But there's all kinds of overlays of all kinds of nonsense, which means absolutely nothing, because algorithms could care less about any of that stuff. Triangles, harmonic this, crabs. It's crazy, I know, but hey, everybody's got to have a religion. So here's those sell stops. So this little area here that's shaded in, that's a area where sell stops would be residing below that 14,600 level, okay, on that 15-minute time frame. So the market dove into that liquidity, and you may or may not know that is a buy. You don't need to. You anticipate a shift in market structure. When the market rallies above, when does that happen? On this candle right here. See that little light bulb? That's when you're thinking, okay, now I have a condition in the marketplace that I might see an opportunity intraday. Let's see if there's further evidence to that. Short-term high is taken here. We traded above it. It does not need to close above that. Okay, real important. Once that candle closes and this candle opens, you're going to monitor this candle, and you want to see, as soon as this candle closes, does it create that fair value gap? If it creates a fair value gap, again, that's a candle at the high, one single pass up. Next candle has a low that doesn't completely overlap all this. That's a fair value gap, real simple. Okay, this candle is where you would look to potentially trade at the earliest, because now there's a gap there. The market trades down into that, boom, takes off. Here is insight that everybody needs to understand, because they're out here running around on YouTube trying to teach order block theory. Order blocks. Okay, I invented it. It's mine. No one talked about it before me, and I first mentioned it in 2010 on baby pips. Prior to that, 1996, I was only teaching it to people one-on-one in teachings. That's it. Okay? You can't find it in books prior to that. It's mine. No one else taught it before me. It is mine. So I'm going to correct all of you today so that way you can teach your people correctly and not hurt them. See these down closed candles? See that? That's all one continuous order block. What's it doing? It's inside that pool of liquidity, sell stops. Where's the open on that? Series of down closed candles right here. That's the price level extended out in time. Boom.